So I'm going to be showing you liquidity grab, sniper, and trading pattern. Actually, before I started making this video, I actually wanted to talk about smart money concept initially, but for some reason, I feel in the mood to talk about liquidity smart or trading system, which is basically a very important way of trading, especially if you're a beginner and you don't have much money in your trading portfolio. So this is basically going to help you enter snipe tradings and be able to make as much money with as less or small capital as possible. So I'm going to take you through the whole thing. What you're going to be learning in this video is simply how to enter snipe entry trades after liquidity hunt. So what is liquidity hunt? Liquidity hunt is simply a situation whereby the big traders, such as the big money banks or stuff like that, which they call big banks, right? They basically hunt small traders like you. They hunt your stop losses, right? So once they've hunted your stop losses and taken you out of the market, they will take your money and then move to the other direction. Now, I know you might ask, okay, so why does these big banks want to actually take your money? You know, when you think about it, it seems like it's nothing, right? Maybe you have $50 account and you'd be like, okay, so if a person who has $100 billion account liquidated my $50, it's nothing. But guess what? Your $50 account could have easily been multiplied up to 500,000 different traders at the time. That's giving them $25 million. Now, $100 billion to winning over $25 million is not entirely a bad thing, right? Because imagine if they do this like up to 5 times in a day or up to 4 times in a day, that's $100 million. So you might think, okay, $50 is not much, but by the time they do it to a lot of people just like you, they make a lot of money every single day. So that is exactly why they hunt your stop losses. So don't think your money is too small or that the big banks don't really hunt stop losses. I know you must have heard about this, but for some reason you might be ignoring it or stuff like that. So I'm actually about to teach you how to be able to avoid this stop loss hunting. So go ahead and stick with me to the very end. And if you actually find this video or this topic interesting, go ahead and give the video a thumbs up and make sure to subscribe to the channel so that you will not miss out on more trading tips. So let's go ahead and see how this works. So the very first thing I need you to do is go ahead and pull up a trading chart, any trading chart you want, okay? We're going to be using forex today, and this market is actually not live because we're currently on a weekend, okay? So all I'm going to do right now is to change this time frame from 15 minutes. I'll increase it all the way to 1 hour time frame. Now this is basically how I trade this, okay? So do bear with me. So one of the things I want you to understand, right? So it also kind of involves smart money concept, ideology somehow, but it's not entirely that, okay? So what it basically does over here is you get to be able to identify the trend of the market, okay? Now, when you identify the trend of the market, you identify the highs where the market is reacting and the lows where the market is reacting more. That way you'll be able to mark out the key points where price is reacting. Now, I can actually use breakup structure to show you this, but it might end up confusing you, as that will mean that we'll dive more into smart money concept. So I'm not going to do that in this video. I'm just going to look for a place where there is a high market reaction, okay? So let's go ahead and scroll and look for something over here. So let me explain it to you like this, okay? So whenever you see a market go up, right, and it comes down, let's say over here now, you go ahead and mark out this place as a point of interest. So let me go ahead and put a horizontal line over here. Now, what you're actually basically looking for is for a market break, a liquidity grab. But once this does not happen and it comes over here, gives you another low and goes up, what do? You move your point of interest over here. And as you're doing that also, make sure to marking it up for the up one as well. So let me go ahead and get another one and put it up here for you. So you can see over here, there's a lot of market interactions at this level. The market just doesn't seem to be able to break this level. So the more the market is moving, the more you are moving with the market, okay? So eventually it did come down again and comes over here. So you move again with it and put it over there. So you can see over here, there's a very strong ranging market within this period. The market ranged and ranged and ranged. And guess what happened? Eventually it broke out this place. Now, once it breaks out this place, here is what's going to happen. Here is what you or most people like you are going to do, okay? Because they've seen the market has been ranging, the market has strongly rejected this particular level, and finally it broke out. Their prayers has been answered. Now, so many of them are not going to wait. Now, this actually is not even that strong, but still, some people are not going to wait. They're just going to go ahead and enter a trade right here and probably look at let's say, the previous high or but they might just go ahead and look for a higher time frame, okay? And go ahead and put their take profit somewhere there and stop loss just below here or something like that. And guess what? The market just closes them out immediately. So basically, what you want to do is to just leave the market, let it just go. And once it goes over here and it comes down, this is an identifier for you to go ahead and go short. Take a profit just here. There's no need for you to be too greedy about this, okay? So when it comes to trading, don't be too greedy and make sure you trade wisely, okay? So let's say you go ahead and do this over here. Your stop loss just above that previous high that you created when you broke out, and then your take profit just at the same point where it is ranging. And this simply gave you a nice profit in just a short period of time. This is currently 1 hour time frame, so you know. So you also need to know how to combine your higher time frame to your smart time frame as well, okay? Now, here's what I actually wanted to show you in the first place, okay? So, look at this market over here. So, let's go ahead and say this is actually where you put this market, okay? The market came up here, rejected, come down here again, went up here, and then finally, this is, let me show you this is in a ranging session, okay? So, let's go ahead and get this and put this over here. At this point where it has been ranging through, and let's just draw it over here to this point, okay? Yeah, so at this particular point to this particular one, okay? So basically what it's just doing over here is it just shows us the medium or the range where this market has been able to come into within this period of time, and then find out what happens. It breaks through entirely, right? So this is now a very clear liquidity grab, right? Because now it's showing us that, yes, it has taken out a lot of stop losses. So whenever you see a market that has this strong momentum, that is a very strong liquidity grab. Now, this is also a liquidity grab, but it is only a deceptive liquidity grab. It can backfire on you, right? But in this case, it did not backfire, but it can backfire on you. It's only a deceptive one. So it's deceiving people that it has broken through right now, is going up, right? Meanwhile, it's still going down, okay? So it's a deceptive one. But this one over here is not a deceptive liquidity grab. It's simply just, it's about to go up. It's telling everybody, okay, hey, I'm going up, right? But then people go ahead and, enter their long position. And then guess what happened? It first comes down, haunts their liquidity, their stop losses, right? They're going to put a lot of stop losses around down here, okay? Let's say enter market over here going up and put stop losses over here. So this is where they enter market over here because of the point of support that has been existing here for a while, okay? So they can just go ahead and draw that range from here to here. They go ahead and enter their market over here, going up, and the market haunts their liquidity, closes them out in stop losses, and guess what? It starts going up and definitely hits this point as well. So these are liquidity hauntings. So whenever you're trading, expect and look out for liquidity hauntings, okay? So it's very, very important. The reason why we use the high time frame for this is because it is very, very stronger when it comes to a high time frame. You are able to identify liquidity hauntings when it comes to a high time frame. So in this case scenario, what you basically do right now is you wait for another formation to add up, right? So if it starts trending, you start using break of structure to trade it. If it starts ranging, you start using this trend line strategy I just showed you right now to trade it. That's just basically how it is. So let's go ahead and reduce this to 15 minutes time frame to see if we're gonna be able to identify some liquidity hunt over here as well. So let's go ahead and increase this, and so here is a way you can do this, okay? So just go ahead and read the market as if you are reading 1, 2, 3, okay? So let me show you an example. We have over here low, high, low, high, okay? So most of the time, just whenever you see over here, just envision a horizontal line, okay? So I can just go ahead and draw it, but it's going to be messy on my chart, okay? I can draw this, but by the time I draw more of it, it will become messy on my chart. So just go ahead and envision a horizontal line whenever you mark out your point. Okay, so let's say low, we have high. So the market comes over here, touches the low again, and continues, going high. So if this had actually given us a breakthrough, I would have been able to catch this trade going to the upward direction, right? Because it signifies a liquidity grab in this particular section. But here's another thing. Okay, so there's also another one over here that happened, but due to I started over here, so I wasn't able to put that into account. But now that I'm looking at it, I'm seeing the market as well, right? Because over here, if you had to start over here, you can see the market did come over here, come down over here, signifying that it's about to go up, and guess what? It breaks through, closing out liquidity. Look at this huge red candles closing out liquidity, and then look at this multiple green candles flowing up, going upwards, and guess what? There is a retest over here. Now this retest is all you need for you to enter your trade. Okay, so once you see this retest, and you go ahead and enter a trade going to the upward direction. But since I started my own reading through here, I didn't catch that particular one, so let's just forget about that. So let's see over here, we have the high, low, high over here, we have another low. Now this low has tested this particular level again, if you have to look at it. So that's why I talked about the horizontal line. It has tested it again, and now what happens, we have another high, and then we have this breakthrough which actually happened. But guess what? There was another breakthrough. So definitely we might have made a stop loss over here, but after this breakthrough and we have this high candle over here, we would have entered an upward trade position. Look at the next high over here. So this is where you should be expecting to take a profit in this particular scenario. Now let's look at the market again and see what happened over here. So at the high session, so we did not have any breakthrough in the highs. So basically the highs were just at the same level throughout. And over here, we have another breakthrough when it comes to the low. If you take a look at it over here, there was another breakthrough over here, and the market comes over here as well. So that was also a breakthrough and hitting a lot of stop losses, right? But when it comes in markets like this, you don't just take a blunt position just because the breakthrough has happened. You actually need for the market to return or show you that it has an intention of coming back to that level and then going back upwards, right? Because if you have to look properly on this chart, it's not your typical stop loss hunting, right? Because we actually did have a low here, we have a low here, we also have a low here, right? So the market just came all the way down here to break. I mean, the stop loss hunt over here was just too much, which is why I neglected this over here and then use this over here. So basically, to me, it haunted this stop loss and haunted this stop loss. So it basically haunted two stop losses at the same time, making it a very more bolder move. And then finally, when it comes over here with these three candles over here giving you a fair value gap right here, it's also a very nice trade. Now, people can take this trade at this fair value gap, but I personally, I don't always trade fair value gaps, right? Fair value gaps is a situation whereby there is a huge candle movement and there is an imbalance within this period or within this point of place. Okay, so people can take a trade upward direction and then boom, you can see the market going for them, right? But I personally, I don't always trade fair value gap. I must confess to that. So you also know exactly when you're following me and you know exactly why I'm neglecting some fair value gaps. You should also know that, okay? So basically what I'm going to look out for right here is this market has broken this structure. We'll mark this over here. It first broke this first point over here, which is the point we would have thought it would start reversing, after breaking it has started reversing to go up, but it didn't. It went straight on as well with full momentum to break another point of support, which is this one over here. And then finally it came up. Now, after coming up, I will not enter the trade. I'll wait for a retest, which happened over here. Now, this is where I'll enter my long position, right? So go ahead and enter my long position somewhere here, which is basically going to be like this. Go ahead and take my long position somewhere here. And stop loss could be just below the previous, or I can just go ahead and just put it over here to take a small amount of risk. Okay, if it breaks through, that means it broke through and I won't be able to make that trade. Okay, and my take profit is basically gonna be the next point of highs, or I can increase my time frame and see if I can be more greedy. But being greedy is not a good thing when it comes to trading. I can see clearly over here the trade actually hit within a few hours, and that was that. And the market has started, coming back to the fair value gap again. You can see this fair value gap that has been hit and it's reacting over here. So basically, I'll start looking for an uptrend if I'm actually a person who trades fair value gaps. But like I said, I don't always trade fair value gaps. So I'll just neglect this and I'll start looking for the next liquidity gap. So look at what I will expect. There's a fair value gap, which is nice, and there is a point of market support, a very strong point. So I will expect this market to actually give us a nice, clean liquidity hunt and then returns up, and then that's when we should start expecting to take a trade after it has retested and confirmed yes, we are going. Now, if you're a person who likes to enter early, immediately it breaks through closing out stop losses and it comes back up, you enter your trade, right? Everything, all these are strategies. The question is which one works best for you. And what that works best for you, you go ahead and trade that. Okay, so you can actually go ahead and try this out in other pairs as well. It's not black and white. It's something you can easily find in different markets and confirm them, right? And then you learn them with time, you master them. You always trade whenever there is a liquidity hunt. That's the only time you trade, and that's it. Okay, let me know what you think about this video. Do you enjoy it? Do you actually learn something new? If you do, go ahead and give the video a thumbs up and leave us a comment in the comment section. Make sure to subscribe to the channel. I'll see you in the next one.